morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Interesting moves yesterday as we saw a surge in the markets overall. A very impressive strength in the markets and has rallied us up through some short-term areas of supply. So let's go ahead and take a look at market movements for today. Going to be pretty short today, but I wanted to highlight a couple of things worth looking at. So we'd spoken yesterday in our live trade room about, hey, listen, if we get a breakout above this line, you may get an opportunity to go long and really run price up to this region. Now, we didn't get a lot of basing here, but we did on a smaller time frame get a retest back to the breakout area, giving you an opportunity to take a bit of a day trade to the long side. Now, I will say this. I anticipated, frankly, a pretty good reversal at this level here. And on the 15-minute chart, we came into it 1, 2, 3, 4, 5, 6 candles later, we had gone nowhere, telling you, hey, don't know that this level is going to work out. And then all of a sudden, boom, we popped right through it. The 60-minute level above that, which is a 60-minute area here, we hit the level. And then let's count the numbers again. 1, 2, 3, 4, 5, 6 candles later, we had gone nowhere, telling you, hey, this probably ain't going to work. And boom, we popped right through it. So those are both levels that they didn't hold, but they also didn't cost you any money following trading rules. Now, this level here, which frankly I thought was the best level on the chart, that just cut right through like a knife through butter in the overnight hours. That has really just no stopping at this point. And when we don't stop at quality levels like this, it does make me take notice. Now, I will say that on our 4-hour chart, we really have been talking about the fact that our downward move was losing a bit of steam, slowing momentum to the downside. And so I think that while I don't have an uptrend here, I don't really have a clear downtrend either. A little bit sideways, giving me the opportunity to get long on a pullback if indeed that occurs. And I always like to take a look and see what happened around the London Open. So looking at around the London Open, which was right through here, that would be this area here. Well, this isn't a phenomenal demand zone by any stretch. It's good, but not great. The better level is certainly the origin of this move down in here. So I will highlight both of these levels. I think both of them are worth taking a look at, and both of them are okay entries. The lower one certainly being a slightly better level from its structure, the upper one being a better level from the time of day that it was formed, both of which could very well hold, and maybe neither gets touched. Sometimes days like this wind up running up pretty far, pretty fast. Now, looking at this on a daily chart. So taking a look at a daily chart, has our trend direction changed? Not at all. But our momentum certainly has. And our momentum is starting to point a little bit more to the upside. Whereas you can see that down here, I have roughly the same swing lows. I have higher swing lows in my momentum. Lower swing lows here, higher swing lows in my momentum indicator. So the fact that we have those tells me that there's a good chance that we may be able to come back up from here and get a bit of a rally. Now, on a much bigger time period, right? Go to the weekly chart, and I use the SPX for the weekly chart. I still need to see a closing price up above this 8-period exponential before I'm willing to consider getting back into my longer positions. And we've not quite seen that. Hold on. Let me switch to a weekly. I was like, that doesn't look right. I knew it didn't look like right for a reason. There we go. I need to see a closing price above our 8-week exponential moving average, and I'm nowhere near that as of yet. And so still maintaining a bit of a bearish stance on there. With some demand down here around 4,000. All right, moving over to the NASDAQ. NASDAQ also rallied up hard. 15-minute area here gave us a reason to get out. This level here, a bit of a breakout trade. And so you notice we just slice right through all these levels. Now we are coming to a pretty good level up here, which has already been eclipsed in the S&P. NASDAQ, I have not yet put in a higher high, but just to be cautious, I think it makes sense to leave this level alone today, um, and try to take a long on a pullback to potentially this area right in here. Um, or if we pull back to this area right in here. Both of those are viable candidates for long opportunities. Um, Want to take a real quick look at crude oil. Like I said, I want to be a little bit shorter today. But looking at crude oil, we see that crude oil is back down to 95. Certainly has come back down from its 130 high. Funny, yesterday I saw an article. Somebody said oil's in a bear market territory. Listen, yes, we're down more than 20% off of the high, but that doesn't mean that oil is a bear market. Um, I think that I would, still need to see a bit more. But on like a bigger picture scale, I mean, we saw a price shock, and we're coming back to the origin of that price shock, that speed candle, that big strong move away, and we're coming to that gap fill area right now. I think looking at shorts is probably a good way to go for your intraday opportunities. Looking at a 15-minute chart, you got a really nice level right about here, with your stop certainly up above the pivot. I think that's a good place to look. You could certainly still take a breakdown from where we are right now, also as an intraday opportunity, as we're putting in a bit of a bear pennant pattern here. Right through here, we could see a breakout one way out of that. So that's really all I have for today. We did see a little bit of a move in Bitcoin yesterday. For those of you that have been watching our Bitcoin conversations, this is frustrating. We came so close to getting filled on this trade, and it didn't get filled. So now it needs to switch to a confirmation entry. Um, but building a little bit of momentum and strength back up. And then Ether is sitting right below. We came close to this little breakout area here that actually makes the breakout a little bit more palatable for a trade in Ether. Bonds and currencies, the euro. We talked a little bit about the euro yesterday. The euro, the better level was this area in here. We came back up to it, came close, didn't get in. Thought maybe we've got something here on this 15-minute time period, the origin of this big strong candle up, and we did get a touch into that level. 1, 2, 3, 4, 5, 6 candles later, we had basically gone nowhere, and unfortunately telling us, hey, don't think that level's going to work. The 6 candle rule has merit, and if you don't know what it is, I will gladly help you. Shoot me an email, we can talk through it. But essentially, it's if it ain't moved in 6 candles, it's probably not going to move your way. So that's all I have for today, everybody. I hope you guys have a great day. Till tomorrow, I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.